All right, and welcome back for another episode of Carnivore Trades. Today is Friday, May 6th, 2022. If you like the content, if you've not done so already, please like, comment, subscribe, etc. Come find me on carnivoretrades.com for swing trading alerts and analysis. Anyways, overall, a pretty choppy day in the markets here. We had a little kind of bear trap in the morning, first half hour sell off, and nice little pop there afterwards. So kind of a bear trap. If you look at the put chain here, or the option chain, shouldn't come as much of a surprise. So a lot of put burning going on. So, 295,000 here at 400 with 59,000 open interest, 67,000 OI on 405, 410, 30,000, 208. So, you get the idea here. Lots of premium burning going on. A lot of people betting on us to get crushed today. And they kind of enticed the downside a little bit. And then look at this power surge here. Now fading a little bit into the afternoon. If we look at the hourly time frame, there's still a chance that we have kind of an inside bar pattern here. A little power bar there, and then we're still inside of that. So maybe they push us up into the close. Maybe not. Maybe the close is above 410. There was a lot of it's kind of a straddle there at that 410 handle. So maybe we close right at that to end the week. All things considered, though, and I know this price action this week was very bearish overall, and we are currently below this low from February 24th, barring a push up in the last 45 minutes. The weekly time frame is not totally broken. So, if we were going to get a doji candle, which is likely on this weekly, this isn't a horror show. In fact, a lot of the time you get a doji after a nice pullback here and into that 100 moving average, into that basically close to that 400 even round number. There's still a really good chance we could squeeze up here. Now, the problem with that is, the big problem with that is yesterday, I can't confirm this. I can't prove it, but I'm almost positive that somebody got blown up on a leveraged long bond trade. And that's the reason why we didn't have follow through yesterday. So if you look at the 10-year Treasury futures, and this was, not really on news or anything, but they were green yesterday morning before the market opened. S&P futures are green, bond futures are green. And all of a sudden around 8:15, 8:30, they just absolutely dumped. And that to me says that there was probably some margin calling going on. We also know that Bitcoin dumped as well. Maybe that was used as collateral. The NASDAQ also dumped out, obviously. So we had this big reversal yesterday. A lot of things probably getting liquidated because of that. That's sort of my thesis there. Again, I can't prove it. But that's really, so again, like every metric I can think of is saying that we should rally up here. We're really positioned for some type of a short squeeze, but if we get margin calling over the weekend, we can dump lower. Now, the positives here, if you look at the triple Qs here, they are much worse than the spiders looking on the weekly, but you're coming into a wall of support here. So you got this falling wedge pattern, which we've been following, 300 whole round number, previous all-time highs. This big zone here is a lot of support. On the daily, you can see this falling wedge pattern as well. So even if we were to flush down, maybe gap down on fear, I think we would wash it out pretty quickly, and we probably would have some type of a short-term bear market rally, at least for a couple of weeks. So right now there is a lot of risk, yes, but I also see the downside as being kind of limited. Semiconductors, same kind of deal here. So we still are holding this bottom channel here of this falling wedge that we broke out of the other day, even despite the selling. So it's holding up there. And again, what's it going to do again on the weekly chart? If we do flush down, like, you got a ton of support in here. So, I see that, and semiconductors still holding green for the week, believe it or not. So, if I told you based on yesterday's price action, the semis would be green for the week, you'd probably say, no, they're not. There's no way. But that is a thing. Let's look at IGV here. So IGV breaking down, right? Like, this looks terrible, right? It's going to fall off a cliff. We're going to crash, right? Well, you pull out to the weekly here. We're into that weekly 200 moving average, and we're already oversold. So likelihood of a bounce is pretty high. Again, if we do flush, you've got pre-pandemic highs right here. Previous all-time high monthly, 50-month moving average. So there's a lot of support here for some of these tech names. that we're coming very close into. So, maybe we gap down a little bit Monday. And if we do, it's probably going to get bought. I would assume shorts are going to cover at that point. And I think that's kind of what they've been looking for, right? Like it's been frustrating for bulls, but it's almost been just as frustrating for bears too. It's like we get down here and then we just can't break, and everybody's just kind of wanting us to break. And here's the spiders. Same kind of deal. 400 even round number gap fill. This trend line going back to 2018. So what's the worst that's going to happen? We're going to gap down into that. I would be hard, unless there's a total black swan craziness that goes on over the weekend, that's going to hold as support, and we're going to have a major rally off it. So all things considered, yes, there's lots of risk right now, but there's also not a lot of downside. There's not a lot of meat on the bone to the downside, and that's kind of my bias right now. I think we need to really make a lower high here, rally up and make another lower high, 1, 2, 3 perhaps, before we can really break any of these levels. So that's kind of my thought process there. Do we go down early next week, or do we start rallying beforehand and make the lower high, or do we gap down first? I have no idea. This market's very hard to gauge right now. Liquidity is very low, and it's a very tough market. We've got the VIX got up to 35 and change today before pulling back pretty sharply. So we have a very volatile market, all things considered. But that's kind of your max downside risk here in the near term that I see on as far as tech and as far as the spiders are concerned. As far as yields, I talked to you guys about this months and months ago, but so you basically take this inverse head and shoulders pattern, and really for max move on the 10-year, I'm just going to show you, you're basically looking at 3.2, which is also coinciding with that double top that I talked about yesterday. So yields kind of overshot some of my targets here, but this one would really be kind of the final target. Right in that 3.2 area, double top, we talked about that yesterday, overbought, extended, etc. So we're probably due for some type of a pullback in yields at the very least. Look how extended it is from pretty much all the moving averages. Now bonds, tend to overshoot when they get overbought. So, don't be surprised if they do move a little bit higher. Here's the 30-year up at 3.221 now. But overall, they're getting very long in the tooth, and they're probably due for a pullback. HYG, this one's going down to 77. That's really your next level here. So corporate debt basically can't get out of its own way, but you got some support right here around 77. So we'll see if it gets to that next week. And I had a nice rally on Wednesday, but obviously couldn't hold it, just like everything else did. Home builders also unable to really hold the rally. Did come off the lows here, so we'll see what we get out here next week. ITB, same kind of thing. VNQ losing this tail candle as of right now, barring a push up in the last half hour here. Dow Transports, again, holding up a little bit better, so maybe making higher lows. The only problem I have with Dow Transports right now is you got a weekly inside bar here. So big red bar and you're inside of that. So never really a good look. We'll have to see what we get next week. But as far as on a relative basis, they're holding up for now. So we'll give them the benefit of the doubt. XLF is making, down 1.5%, but it's still holding this tail candle. So potentially a higher low. And you got this lower divergent low trend line. Let's look at XBD, broker dealers. So finally getting down to that 400 handle that I've been talking about. I was hoping we would get down there earlier this week. We didn't. Now we're testing it. We should get a bounce off of this. We should get a reaction off that diverging low falling wedge trend line. So we'll see what happens next week. But broker dealers are a little oversold here in the near term. Crude here, not a whole lot going on, so unable to get above yesterday's highs, but it's hanging in there pretty well. We'll see if it wants to go up there and attack that 115 handle. But again, until it does that, and until it can take that out, you still have lower highs in play here on the daily time frame, with slight higher lows here in the near term. But again, you kind of have equal low and then a slight higher low. It's a really choppy chart, all things considered. But hey, what can you say? Energy is holding up. XLE here, back testing this trend line after that reversal yesterday, kind of an inside day, nothing too terrible. It's a strong industry group. XOP, same kind of thing. OIH is much weaker. Kind consolidating kind of beneath that 50 moving average. So we'll see what we get out here next week. Nat gas, pretty strong reversal off that $9 handle. I was looking for it to get a little bit above $9. Let's see what the high was, 899.6. So just almost got above $9. Now trading just above $8. So a humongous reversal there for nat gas. We'll see what it does here. It's very reminiscent of that pattern we got back in September to October. Well, we'll see what we get out here. This is a very volatile asset right now, but crazy moves there in nat gas. Dollar index kind of just chopping here beneath that 104 area again. It's all about pattern at this point with the dollar. It's seeing a lot of money flow, and it is overbought just like yields are. You could almost make a case that with yields coming into that 3.2 area and the dollar coming into this double top area, that they're also kind of coinciding with resistance. So we'll continue to monitor that as well. Gold, you know, what can you say? Kind of an inside day here. Really nothing too much going on here. You see the GLD was up earlier, then it kind of came back in. Really just inside of this red bar, and it's just kind of messing around right now. Nothing too crazy. GDX, again, I still think 32 is your good buy area for a long on that. And silver, tough trade right now. It's oversold, and it needs to get a bounce here, but yeah, just can't get out of its own way. We'll see if next week maybe it can get some type of relief here. Platinum also coming back in a little bit, and palladium losing, kind of, you know, was starting to make higher lows and now starting to lose that sort of wedge pattern. We'll see if they save it next week. And copper also dripping down a little bit here, so we'll be watching this into the close. I don't think it's, well, the COMEX is closed now, so I guess it doesn't matter, but yeah, so it did lose that 425 spot 55 area, so you're probably headed down to that 100 moving average. So you finally closed below this green bar low on a weekly basis. So to me, copper is headed down to about $4. That's going to be your next major area, but not a good showing overall for copper. All right, so flipping over here to Bitcoin. Again, getting hit pretty hard, you know, down to 35 and change here. It is a little bit off the lows. We'll see what we get over the weekend, but obviously you're going to have support in this area, these tail candles, but overall not a good look for Bitcoin. We talked about that inside bar. Same thing on Ether. Ether making lower lows now, and Ether may be headed down to this 24-25 area with this lower trend line. So we'll see what we get next week, but overall coins are a little bit weaker, on the weaker side, and that's generally not good for equities either. So as they can be a leading indicator very much oftentimes. Well, let's see what we got here on the spiders. All right, so, you know, kind of just chopping in this range here. Again, another half hour in the trading day. It's just kind of grinding sideways to lower. We'll see if we get some short covering or something into the close. Overall, I don't expect it to change the pattern all that much. All things considered, we really just got to wait for next week here. All right, guys. Anyways, I'm going to wrap it up here. Come find me on carnivoretrades.com. Thank you guys for watching. Take care. I'll talk to you all next week.